Here we go. All right, let's have a look. So still still stuff to take to the downside if they do want to go down. So this is kind of what I'm looking at on Bitcoin. So this close is one of those ones that can create either a move to the trend, which then bounces back to the hold. So that would be kind of the bullish take where Bitcoin only kind of dips maybe to 109 or something like that. But it can also go all the way down to the new range trend because this formed today. So that's down here at about 102. And it can maybe not 10 hours today. But it also broke the interior trend as well. So it could just be over time trying to work its way down to here. We haven't retested this, so pretty much that move has the potential of going anywhere from 110 being the really bullish thing through to being 90k, depending on how it dives, if it dives. Yeah. Yes, New Zealand. It's easy, just quit. Don't work. Problem solved. Do what you want when you want. So this short term trend moved. So you might get a bounce back up, retest of the break level. It's just a case of whether it dives back down and then goes back up. But the break level here is 114151. Sorry, that's the top of the range. Top of the range is 114151. And what was that rejection level? Oh, surprise, surprise. Rejection level 114151. So if it travels back to the top of the daily range, it could basically then reject off the 43-day hold. So that's kind of got a bit of confluence. We'd have to really break out of the top of the daily range then to actually start to get beyond this. No, it doesn't look super bullish. It's kind of, if it goes up, it could smash back down again, and it probably will go up if it bounces off this trend. So, and this is opened without a hold level, so it's just very subtly pulled back down before the daily close. Yeah, exactly. No one watches it, and most people probably don't even watch the 7-day. So that's opened under the new range trend, so with no hold level. So total bullish case is it bounces off the backside of the current downtrend, which is not hard broken and doesn't have to bounce off that. But this might be okay, this 105 level. So that's been recently converted to high time frame support. So if it whipped through the trend and hit that, And then down here at 101, you've got your range trend, which hasn't had a test yet. So that could be another potential destination. And then, of course, you've got the super bearish one, which is all the way down here. So yeah, if they take this thing for a bit of a liquidity dive, it could grab any of this stuff and then come back up. Good news is it'll probably come back up. And yeah, kind of all started there on the weekly where they didn't create that hold level. And of course the 3-week is in rejection. Not good. Right, so there's a pretty good chance BTC is going down. Pretty good chance. And if it goes up, it's probably just to grab liquidity and then go down. So Sol moved the trend to here today. Got a range trend sitting here. That first resistance is about 195 and we've kind of snuck towards it. It could push up here, but it's still under the trend. So could try, if you're not already in a Sol position, then could try starting something around 191 and just seeing if we get a bounce off the backside of the range trend and the newly relocated trend. So if it comes down here, and it has really good confluence with that as well. So that's 191.112. Yep. I think regardless of what happens in the next day or two with the news and all that kind of stuff, there is a really high chance that we end up here at 217. Because there's nothing else really from a daily structure perspective to stop it. And there's absolutely no coincidence that that wick of that hold level happens to be that exact fib target based off that candle. And that candle hasn't been revisited because it's fully engulfed and it's found support off this level. So yeah, I don't think, maybe we get a big sweep of liquidity or something. Yeah, maybe. But I think we end up here. And there'll be some magical tweet to make that happen. There's the crystal ball. And this is in the middle of nowhere. So this could be the kind of structure set up and waiting for, say, a big sweep at FOMC, because we didn't quite hit that 175 level after closing this candle with this candle. So if you're looking for getting like a deep entry on some kind of shock liquidity sweep, it could be down to this sort of area down here at about that 170 something, and then back up. And then if they close the candle up over this area, then it can continue up. But structurally, this just looks like it's the biggest weird setup that exists because it created a range trend. It rejected without even touching the range trend. Created an origin level, hasn't visited the origin level, hasn't touched the range trend in the middle. It's just strange. It's like it's waiting to Darth Maul everybody in both directions. So it might go down first and then up, or up first and then down, but that could be what they've created for the news. And assuming this doesn't just go down first, it would be something like 198.6 or 204 that would be the resistance here. So it's got some pretty low targets. I don't know, what do you guys think? Do you think they're going to smash this thing all the way down to these new trends that they've created? Because let's face it, no one really thought they were going to do what they did on October 10th. I think we're already dumping. $60. Yeah, kind of my thoughts exactly. They can kind of just do whatever they want. We'll see what happens now because this may bring us back up. See. Yeah, if I look at the 1 hour liquidity, so it's about that 173 area if they were to take that, which lines up with that 101 area if they were to take the same sort of level on Bitcoin. So it's, in worst case scenario, those are pretty fair targets, pretty easy to get to. But yeah, there's not much on there that's lower than that. I mean, they could just pump. You never know. Okay, what do we got? 50 minutes. It's annoying taking a scalp right at the beginning of a candle because you don't quite know what it's going to do. But if we get back up above this 193.6 level, then probably just TP this into the back of the range trend or up here. And if it closes under the horizontal level or under the trend, then just close the position. Yeah. I mean, they kind of wiped the board of leverage, but didn't really go up. That's sort of, I've hung around here for so long that it's all just piled back in again, really. Do, 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 do. Hmm. Or it's kind of more a case of they want to use it to create their positions at a discount. Maybe someone could explain it to me, but I don't really get the whole leaving leverage behind thing and why it's a problem. It's just a if there's a whole bunch of longs in the market and they win, it just means a short lost. And if there's a whole bunch of shorts in the market and the longs win, it just means a short. Yeah, a whole bunch of shorts just means a long one. It's just money moving from one person to another. I think the real reason they take leverage is just because it gives them the ability to open large positions at discounted prices by using the forced market orders that happen when liquidations happen or stop losses get hit. I don't think it's really, yeah, it's just good for big players to open orders. It's like if you want to open a really big order, just put it wherever James Wynn, wherever his liquidation level is. Right, so for those who are relatively new to the concept of streamings, um, this level down here was a break level that was hit by these hourly candles and it's been revisited. So we long this level and the TP is kind of a bit determined by the time. So if it spends too much time down here, it'll just get stuck with the trends. If it gets back up above here, then it would probably try to push up into one of these levels. So it kind of depends a wee bit on the time. You could just TP it now if you're being really conservative and just scalping between these two levels. Um, or just wait and see. Unfortunately, it's 45 minutes of wait and see. And what that alert there is telling us is that there's a 15-minute resistance level just created to the upside. Up here. So it's 19. So under there. So 193.893. So you want it on the 15-minute chart, you want it to recover this and close over the top of it, which would mean over the top of the trend and so on. So then 15 minutes still moving up. Um, well, see, structure's only created by closes, and the next. So today we only had. What do we have today? We had a 1 day, a 7 day, a 43 day. That was sort of relevant closes. Tomorrow we've only got a 1, a 2, a 51, and the day after that we've only got a 1, a 3, and a 101. So the next couple of days they can go absolutely crazy with what they do with the price. It doesn't really have a lot of structural implications. So these are it's not quite a prime day where it's just a 1 day, but it's pretty close. So yeah, if there was ever going to be a day or a couple of days to create chaos, uh, yeah, we're in them. Let's see. It's 194.9. Getting back up there. Yeah, so this break level is a 15-minute origin level. So it's probably going to hit that if it gets past that range trend. So I might just set that to TP there for now. What's XRP looking like? Answered for me. Oh, it closed under resistance, kind of on the trend. Looks boring. Might break the trend at the end of the day. But nah, nothing I'd be trading. Yep. Just set this thing to, okay. Instead of staring at this, we'll just take 10% from that, and we'll put the stop loss at the entry. Right. What's Sui doing? So Sui's created a range top up here, and it's kind of got a bottom somewhere. What do we got? So this level or this level, they could both become the bottom of that range. So that's 2.4373 or 2.4158. And then there'd be probably some older levels. Or maybe bigger levels. Let's have a look bigger. I mean, these levels down here are really big, but they've kind of already been whipped through. Everything's been whipped through on this. It's madness. So every single one of these levels coming all the way down here to 50 cents is basically a support level. So um, it's pretty good though that there should be enough stuff in that 2.23, that 2.23, 2.3 to 2.4 sort of area. There should be enough stuff there to actually bounce. But to what target, so depends a little bit on time. So if this candle slowly comes down to this 2.2364 and kind of taps it and then opens the next candle, then the target would just simply be back up to the 2.44. You wouldn't necessarily know that it's going to go any higher. If you look at it, yeah. So if the weekly doesn't touch the 2.3933 before close, then the next touch of that you'd long and you'd target probably this weekly hold up here. But at the moment, that's a pretty bearish looking candle if it doesn't turn around. So maybe the monthly. Yeah, it could be an epic trade next month, maybe. That's a hell of a monthly range. There to there. Yeah, so if you were going to take any kind of trade on that, you'd have to allow for basically the price ending up in this lower half. So at the moment it's in the upper half with $4.30 being the top side of the range, and the bottom of the range will become this range trend basically at 57 cents. So if it maintains that sort of level, pretty good chance it goes up here. If it ends up, say, closing under this trend, then pretty good chance it comes down here. So if you did open a position there, you'd have to basically be super patient. If it didn't go up and you didn't choose to just stop it out, you would almost have to wait for it to come all the way back down here to then average it to then bring it back up. So it'd be, hopefully it goes up. And just take a TP, take a partial TP there at about $3.06. I mean, I don't think that would just drop to 50 cents again, but hell, you never know. $10 reasonable? Yeah, maybe. $7 to $10. Depends how long the cycle goes for. If the cycle really does continue, then absolutely. Like, the range that can be built off that candle is actually quite big because of the size of that candle. So say for example the next monthly candle closes over $5, it can bounce off this level here, which creates the base of the range, and then that becomes the top of the range somewhere up here between $10 and $13. So it's pretty, it is possible, it's just got to have a pretty good pump. Hasn't really been around that long, but let's see if we can find an example of that. So closed up. Yep. So say when that weekly range was created, so you've got your fib here, scroll or a line of candles come up, ends up hard closing over the 1618, comes down, bounces along the 1618, goes up to the 4. So Sui's been around long enough that it's got a few weekly ranges, but it doesn't really have any major monthly ranges. But if it creates a monthly range, the top of that monthly range could be $10 to $13. It's a big if, because it hasn't done it yet. Yeah, it's a hell of a candle, so it could do it. What's happening there? We're getting hold levels. Oh, yay. Hold levels to try and get through trend. So even just the top of this 15-minute range could be up here at about 200. But we've got resistance here, so if you're taking a 50x scalp, you don't really want to see it fly back in the other direction. What question did you ask? Today's video. Yeah, so the way they closed everything today was they didn't create any new decent support. So pretty much what they can do is they can just pump the price up and then just dump it straight back down again. It's set up for a Darth Maul, head up into resistance and then dump down, or dump down first and then head up. But yeah, it's not they didn't set it up to break the trends. It's quite the coil. Yeah. There's just a lot of compression across a lot of tokens really at the moment. That's why they're stuck in these little tight ranges, and then occasionally one or two of them pop. Yep. Yeah, 7 to 10 reasonable. Yeah, so the 185 hold on daily on Sol, which is this one, it doesn't necessarily have to revisit that before going to 217. So this is there's two types of hold. You've got sort of your typical hold levels, and then you've got hold levels that are designed to be the base of a future range. So this one has the characteristics to be the base of a future range, which means what it does is it bounces off this 191.112 level, and then it captures this 199 level, and then it bounces off that, and then it goes to the 208, and then it goes from the 208 to the 217. And 208 is significant on the monthly because we want to make sure, okay, we almost don't want to close over that 208 level on the monthly. So they might, and we've got 3 days to go. So something that just makes a lot of sense would be 1 day here, which you need to get over a trend anyway. 2 days bouncing in, second day bouncing in here, which is good because we don't really want to close over that. And then after we close for the month, we move up to create a hold level on the higher time frame over the next month. So if they're trying to structure this to basically evolve it into a monthly range, which would then allow them to expand to the upside quite a bit, then this is the daily structure, and that's how it would play out if they wanted to then create the monthly structure. But the other side of it is that it's not silly to have an order just down inside this candle, because if they do, sometimes what they'll do is the liquidity sweep will be confluent with them taking the price down to the hold of the range. So you might find that that becomes your best entry in the future, which is sort of like, show you on a lower time frame. Brings back memories of just sitting there waiting for 15-minute charts to wick down. So, okay. So, first you find one. There's one. Okay. That's the one that creates the range. So that's the first trade in there, first scalp in there. And then they retest it by wicking down into it over here. And then off it goes to take the top. So yeah, you can generally tell the ones that have created a range because there will be a move like that which comes off this level, which doesn't get to that level. So that's there, up to there. And then this is the test of the hold of that entire range, which managed to ladder up. So, don't know if that makes sense. Just from a trading perspective, if you've got something that runs away like that, you can sometimes enter there, TP there. So now if we look at what's happening on the daily, because it's all just fractal, it just happens faster on 15 minutes. So we've got the potential of a retest before we move to an all-time high above the range, which is why it's not silly to have an order sitting on that hold. But you're more likely to create a move like this before you even see this happen. So if we go back here, this is our possible hold. We think it's our possible hold because we're already bouncing off this. If that's the case, we're probably going to see this, and then that's our range. They can't really do that without stuffing up the monthly, which is why it probably won't happen until next month. And then if it does, everyone will be so bullish because we're up at, Moonvember or whatever, and then they'll sweep back to this, liquidating all these people, and then travel up to an all-time high or a newer high above that range. So that's the kind of thing that can happen. I think the only thing that really gets you completely stuffed too is greed. It's like, is it safe to enter here? Absolutely. Is it safe to enter there with a 100x order? No, not at all, because you never know. They might wick down. And particularly if they're planning on going higher, because that's the kind of the point. If you're gonna push the price up really high, often you sweep all of that liquidity to the downside, in which case the candle goes down through the hold and then comes back up again and then travels off, and that's why high leverage traders sit there going, oh damn, I got stopped out and then the price went to my target. It's because they actually were 100% right with where the price was going to go. They knew it was going to bounce and go up. They just forgot the greed factor. The greed factor is that the people who were pushing the price down wanted to grab all of that liquidity to open really big positions. Um, could it happen? Is it more probable than not? It's more probable. It's more probable it will happen. Because there's a few stages that it kind of has to go through. So number one, it has to close over this. After engulfing that, well, actually, sorry, let's rewind. Number one, it needs an origin level to actually create the boundaries of the range. So that's this. That's this right here, and it bounced. It then needs to create the hold of the range, the very first hold. So that's this. So that's step two. Step three, it needs to close over this level, which creates the base of the range. And then it needs to bounce and it needs to start working its way up these levels. Now it did very subtly close over that 199 level the other day, and then it fell back underneath it. So up until that point, it was almost like it was going to happen straight away. Oh, I set your entry, your stop loss. I think I might have hit my TP. Nope, not quite. I think it's about to. Oh yeah, just got my TP. Okay. So Pampin. Well, that's one trade today. Yeah, so what I was saying is up until this candle, which closed below that level, it had pretty much done step one, 2, 3, 4. And so then I was looking at it and going, well, why didn't it keep going? But then when I look at the monthly, and this is totally just been biased towards the bullish side of things, I look at the monthly and I go, well, how do you escalate the monthly range? To escalate the monthly range, you need a blue candle, which means you can't go over 208 for the monthly close. You can go up for a bit, but you've got to close under 208. And that would be that sort of third level on the daily range. You can't create a hold level, which means you must close above 200, because if you create a hold level, you're more likely to go down rather than up. And we haven't hit the trend at the top side, so we already have a target to chase to the top side. So it's almost like the timing of the daily range creation is being conditioned to sit within the requirements for the future monthly price action. That, if that makes any sense at all, doesn't my mind, but who knows? Hello. Yeah. So yeah, that's what it is. So now if we just completely want to have a nice bullish fun times today, imagine that this thing creates a blue candle, and then ETF hype and rate cuts and blah 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 all kick in, no hold level. Next candle closes up here, yellow, bounces off this, travels here. If it closes above this, it's above the trend. If it's above the trend, it can break that trend, and then it can go here. No one would really know where the top of the range would be, because depending on how long it takes, it can develop into a bigger range than a monthly range. It's like it could become a 2-month or a 3-month range, but it could work its way up through these levels. This level this thing coming through here is a trend that's pending retest. If it got on top of that trend, it could bounce that trend, and then that trend can take it to the next level. So it's absolutely the same as what you could see on a 15-minute chart. It just takes a lot longer to go through the process. And there's certain things obviously that has to happen. It has to close within a certain price range. It then has to close the next candle in a certain price range, and then it has to retest, and then it so on and so on. The rest is, I was about to say the rest is history, but it hasn't happened yet. So if you consider the whole thing that they just did with Sui, is the reason that they absolutely whipped that damn thing down to 50 cents is because they wanted that candle to be that big. Because if that candle was not that big, there's no way a monthly range could hit a $10 target off that candle if it gets created in the future. That's the kind of thing that kind of blows your mind, eh? People are saying, oh, it'll go to $7 to $10. Well, the only way it could go to $7 to $10 is to have a candle of that size. And that's the exact reason why it needed to go to 50 cents. Ouch. Yeah. Yeah. So that's why I always rabbit on and say things like it's bullish if it goes down first. Because if you've got liquidity outside, they probably will use it. But if it goes down first and creates a distribution candle without a hold, it's very probable that they're planning on creating a range. So that's just like this one. See? So it's all just exactly the same stuff. Closes up, bounces off, targets The 4. Rangers. Welcome to the 1% of people in the world that probably know this stuff. And they'll never tell you. They'll sell you a course instead. And that won't tell you either. Yeah. So if you want to be bearish, let's show you bearish. Imagine, just imagine what would have happened if those damn candles had closed under that. You can't have negative $195, right? But do you now see why the candles didn't close under that? It would have literally sent it to zero. Or if you want to look at it the other way, because it sometimes makes more sense to look at things as an upwards. Imagine this yellow candle. Golf mints came up. Imagine if it closed over the top of that. Bounced on the top of that, and then moved to level 2. That's $17. Level 3, negative 89. So that's exactly why it closed within a couple of bucks on the inside of that line. Cheat codes and drinking. How did you get to this level of proficiency? Oh, I stared at charts a lot. Just stared and stared and stared and looked at the way price moved and ended up figuring it out. Like, it's like if someone says to you that there is something happening, you then start looking for it. And once you're looking for it, some people can see it, some people can't, but it's there. One of the jobs I did before this, I was in a industry where there were certain reports, like to do with there were financial reports to do with money flow and stock, and these particular reports could only be generated by this really archaic software system, and you could receive these reports generally twice a month. And the problem with that is that you could sometimes, depending on the cycle of things, you could end up with a month going by and bad debts and not knowing that you hadn't got your money and all this kind of stuff. And then one day I was looking at this tape view report that you could run on the computer system, and it was about 500 pages of just numbers and references. And I looked at it and I went, oh, hey, if that reference appears X number of times, we know the status of the claim. If it appears, one more time, then we know that's a different status. And then from that, basically was able to build a very simple tool that just scraped the text, counted the times, and told you the status, which you could refresh at any time, and you knew the state of your outstanding debts. And it was this thing that exploded people's minds because they'd spent 30 years chasing bad debts that had become bad debts because of the limited amount of time that you could run these reports. And instead, we could run them every single day, and then I built a system that automatically emailed the suppliers and asked them for the money if they hadn't paid in 7 days. And that was, yeah. And if you start thinking about that from a hundreds of millions of dollars perspective, if you've got your money back within 7 days versus within 60 days, you make a lot of money on that money. So it was very valuable stuff. And it all just came from looking at things and going, oh look, there's a pattern, and then digging deeper into it. Popped into my X timeline with your death candle. Thank you. Yeah, it is crazy to think this whole thing is just kind of, and it is real money. Like people are spending real money to move this price. They're buying and selling assets, etc., etc. When I say people, it's probably just computers, but something else I was wondering the other day is that whether the liquidity is actually the instruction. Because when open interest appears in the market, it tends to appear quite symmetrically. So I don't know whether it's confused traders or it's a means of directing the algorithm. Because you always seem to get quite a symmetrical amount of 100x, 50x, 25x leverage appearing within the same realms above and below the current price. So I don't know whether that's maybe how they actually get it to move. They just simply, because it would be delta neutral for whoever does it if they're putting in a short and a long with liquidations in exactly the same place, but on opposite sides, as long as they close one when the other one gets liquidated. So, could be a very complex set of instructions where it's if liquidity appears or if open interest appears in that direction at the same time that the price is at a certain price at a certain time, sorry, a certain price in a certain place at a certain time, then the move plays out. Because it is noticeable that if there's no liquidity, top bottom of price, well, stuff just goes sideways. Yeah. It's kind of when someone says they always take the red, it's like, well, they don't always take the red. Because red appears both sides and then they go one way. So, and then sometimes, I suppose because you don't know whether that position is still open either, which is the other side of it. So, really, it's all just estimates. Yeah. Right, we should find another trade. Can't have one. Okay, let's see what Fartcoin's up to. So Fartcoin's finally entering our area of interest. Um, so pros and cons is it's come at the whole candle from the top side, but it's closed under the range trend. So for this to actually get up to the target up here, it's now got the trend, the range trend, the downtrend, all to compete with. So it can do it if it does it early enough in the day because it can do a sweep to the upside and push through this, but it's probably going to end up lower. So you could put a small entry here, but just expect that it might go into drawdown. The other refined parts of this candle are down here at about 3408 and 3303. So you'd want to be adding some more if it came down here. And then if you bring your average inside the bounds of the candle, if it spends too much time in here, the top of the candle will become resistance, and then you can TP into the top instead of bothering to try to go up there. It probably will go up there, but it could just be a long time, and it might have to break through the trends and everything before it goes up there. So just if this doesn't pump, the other level just in here that would be maybe just worth taking a bit of a scalp on is that 3499 level, which is the daily. You've actually got a couple of daily origins, so you've got the 3499, which if it worked to that, that could give it the energy to push up. And you've got the 3. If we get like a news wick or something with FOMC, then you've got the 3293 level down the bottom here, which would also be a daily origin support level. So there's some really good levels in here to bounce, including just where it is now could technically do it. Yeah, there's a link on my X or YouTube for jumping in the Discord. Oh, it's in the video description too. Or videos, yeah. Don't think it's in the live stream, is it? I haven't set up the live stream with pretty thumbnails or anything. Okay, so that's Fartcoin. Right. So AI16Z could create a range. So if it comes back to here, or if it comes back to here, you'd only take it to here just to be safe because it could be failing. But if it bounces here, you could take it to here, which makes plenty of sense because it's got this yellow candle here already, so it's probably trying to create a hold level, and if it creates a hold level it'll dump. But that's on the daily. I wonder if there's anything we can get a bit faster. There's plenty of confluence down there to bounce. Kind of miss shorting that. So it might pop up to that for a short off the origin. Does the 1618 line up with the 50%? No. 50% is stupid. Short version. What people should do if they're considering trading just basic market structure to the 50%, that whole, blah, 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 dip it down, 50% retracement. First of all, it's probably going to be more than 50%. It's probably going to retrace to 61 or 78%. Second is what you should do is look for an entry below the 50%, and it will probably be some kind of hold level that you can just see without even really needing to think about it. If you ever see a range, or what you think is a range, and it doesn't have a hold level sitting below the 50%, then it's probably not a range. That's like, say this retracement here. If you took this blue candle and went to, say, the top of this yellow candle, this range, then your 50%, if you said that was the top and that was the bottom, then you would have probably entered around here. And there's no reason to enter there. Like there's no origin level, there's nothing. In fact, all you ended up with is stuck underwater, because someone said retracement to the 50% and bounce. what you should probably do is look for some kind of hold level. In this case, this backside hold level all the way over here, which comes through the FVG, and that would have been the place you would enter. And it's typically going to be more than 50%. So I swear that the people who continuously promote 50% retracements are just trying to get you to be their liquidity. And that's a very simplified trading strategy, basically. What you should do is just completely ignore that strategy. Just totally ignore it. And just all you need to remember is break levels, hold levels, origins, trend lines, and the various types of trends. And if you want to go deeper down the rabbit hole, you can. But if you just want to make money, you don't need to. Just sit at the top of the rabbit hole and don't fry your brain. Okay. Oh, bummer. I was hoping we were going to get a 4-hour origin level on the bottom of this one, but not today. Well, not that candle anyway. So yeah, just keep an eye on this. So this 4-hour candle, if it closes up, great, or just anywhere above the break, fine. If the next one doesn't touch the break, then what we should look to do is take a trade on the revisit of that and pump it up to here. That could be a really good move. I just took a really small trade on this the other day, just these two candles basically. But it'd be nice to get the base of the range, and then it'd head up, should head up all the way up to here. So that could be good. Break level. An alert on it so we don't even have to think about it. Okay. Let's get on there. It's very probable that ETH will just pull back up somewhere in the next 4 to 5 days above that line. Very, very, very probable. Like it did here. Straight back up. It's got a hold level. It should be going to the trend, but it's sweeping the liquidity to the downside before it does it. So you could look to do something on that. More of a swing trade. In fact, you could look to enter on that if it comes down there. Or even there. It's got two really good levels there. So if we get FOMC news, blah, 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 wick, dip, 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 then that level or that level. Both origin levels, both on the daily. Pretty good areas to get in. In your daily trend, let's see where our trends are. Oh, do it the old school way. Let's do the better way. Oops. Oh. Okay, so our current weekly trend is there. Which makes our daily there. Beautiful. So if this does a liquidation sweep as part of whatever news event, it'll be pushing through the daily trend into the daily support levels. That's the kind of thing that bounces. Sorry if I can ask in this same trend. So what were the two support levels on the long side that have higher probability? Okay, let's have a look. Okay. So just note 161 is a huge support level. It may not go there. That's the daily trend. Just incidentally, check this out, just so you can see why time arrayed trends are so accurate. So when it comes to first touches, this trend line here, which is at 173.314, or 173.314, that is a trend that is done on a single time frame. And then this trend line, which is not anchored to the bottom of that yellow candle, it's anchored to this blue one. That's done from a time arrayed method, and it's 172 point something. So if you look really closely at where that trend got hit, that's why time arrayed trends can be more accurate for first touches. They can, yeah, legitimately give you the dead set to the cent trend. So you just start from a higher time frame, work your way down. So the levels that, if you were going to get support, so if we then take that, okay, it's our interior, and I don't even know if Sol would really be able to work through that easily. You've got your interior trend, you've got your hold level, which appears like it's going to be the hold level of the range. It's got just too much support, really. Just seems too strong. 181.8 would be your starting point, and then it's 177.170, then it's 173.520. Thank you. Yeah, that's event. I mean, that's all. That's all you need. That's all you need. And it's not terribly hard to find a trade just based on those things. Yesterday was a bit slow, but every single one of those trades played out by the time we'd woken up in the morning. So the ones that we had entries on anyway. Should we? Yep. So structurally, Sui on the weekly is looking a bit weak. However, it's the token that's probably in the best position to have a massive pump if a couple of key things are met. So that's pretty much all you can really say. If you're looking at taking like a lower time frame trade on it, it would be revisiting of these levels down here. So basically your 2.4373 or 2.4158. Yeah. I mean, at the end of the day, there's so much SOL printed every day. There's huge amounts in the hands of the validators. They can dump the price pretty rapidly if they want to. It'll really just come down to liquidity. The 1 hour liquidity charts show the exact level, and this is probably this little blue line down here is at 173, and that's kind of roughly the same location as your 101 on BTC. And for the most part, that's still just moving up. And those daily origin levels, the lowest one is down here at about 173. So yeah, they could work all the way down there. The question is, would they? It's not looking very bearish at the moment. It's got range trend, range creation, prior trend interior, prior broken trend, another range trend, then you hit those levels. So yeah, it could. And it's got untested origin level, another origin level, and an untested origin level. It's a lot of stuff to push the price through. Not that they didn't do that on October 10th, but yeah, I don't know. Or it might just become a hated rally. SOL might just go to the upside. Um, yeah, so if Sui loses those levels, then yes, it could go very low. But it's losing the levels means actually spending time under them and closing under them. Um, and then you've pretty much, like, as soon as you lose these two levels, it would probably just push straight through the break level because this bottom one down here isn't the same structural importance as these two. So it would probably just push straight through to this one. Uh, and that's 21 cents again. And then, but all of these levels, the thing that this wick has done, which I mentioned in a previous video, is that it's actually converted basically every single damn break level on the chart to a high time frame support level. So like all of this is actually really strong support now because of that wick. And the fact that it went down and closed up there and then never went back to these levels. So they're all very, very big, strong levels now. And you can kind of understand the psychology behind that. Like, imagine everybody with any decent amount of money just lying around who's now going, oh, wow, those lucky people that got those really good entries. Well, I'm going to put my buy orders down here as well, and hopefully I'll get them. And that just purely that mentality is going to stop the price from probably ever being able to get back down here again because there'll now be more orders in here than what was here previously because people have seen how it can pay off. So that's the kind of way that human beings have an effect on price levels. Now, if they see a big bounce off a certain price level, they'll fill it up with orders. So, and of course, the robots work the same way. So yeah, would it be misguided? It's typically it's misguided to open any big position before a news event. And as the day goes on, like so as the day goes on, this will probably get denser, top and bottom, and these gaps will start to fill in, and then the news event will come out, and then there'll be some volatility or whatever, and that liquidity might get taken. So yeah, it's usually not a great idea to open anything big, but that being said, I've got a long open, so total hypocrite, but it's not big enough to liquidate me, even if it works all the way down to 120. So well, thank you, sir. Um, yeah, Sol. Would we open a long on Sol? You kind of need a reason to open a long on Sol. That candle is not a reason. Bouncing off this 191 would be a reason. And any dive below that, you could just look at your key levels like your hold level, your trend, and you could actually just start laddering in. So if it touched that trend, you could open along. If it's weird to say this, but I can hear this stuff happening. Like the fans on my computer system just go crazy because the order books start fluctuating really, really, really fast. And I don't know what it is, but the thing just gets super loud. And when I call them Elmo fans, Elmo chaos, when it just starts getting really noisy and really loud and the blue candle starts going down and there's no wick on the bottom of it and it's just pushing, 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 pushing and everybody is scared and they don't want to take a long, I'll be going, I'll put a bid in there, I'll put a bid in here, I'll put a bid in here, and then I'll put orders on these damn range trends, and every one of them will be getting bigger. And then what ends up happening is the fans shut up, the price goes back up, and you got your entry. So those types of events happen because there's a tweet or there's a news event, and um, they basically turn up the speed dial on the algos, and the algos basically make the price go hardcore in one direction. So yeah, at the moment it's just the fans aren't noisy. It's just sitting in between support and resistance. It's doing nothing. Uh, so yeah, absolute most bullish entry I'd say would be the bounce of that trend or the 1618, and then into the whole candle, and yeah. And each one of these entries I would treat as an individual trade. So if I entered on the whole candle, I'd be TPing on the back side of the 1618. And then if we went back over the top of it, I could re-enter, and the average would be profitable. If it went down below, I'd be underwater. I'd enter again on the trend line. I'd TP what I entered on the back of that level, and so on. So you kind of treat them like individual levels, and then you never get trapped because you're taking out what you put in. And in the end, what you sometimes just end up with is a price that heads off to the sky. Break touch. What do we do? Yep. So it's hit the next break level down now. So we'll see if this creates an origin level in the future. We might get a trade. It can still create an origin level off that top one of the candle. Yeah, gets back up over the top. Yeah, I don't know if people can even hear them. I think the microphone, I bought that really fancy microphone, and it kind of cuts out a lot of the noise, I think. Oh, yeah, you're welcome. So this could come down to here and get an entry. So in the next 1 hour and 35 minutes, when this candle closes, if they just keep it on the underside of the break level, then more often than not, the reason for that is to open the next one and then drop a level. So they might be trying to work their way down to here, which would be the retest of the broken range trend and the origin level. So not a bad place to get a scalp entry. See what's going on. Oh, what's Fartcoin up to? Bouncing around. Actually, you kind of want to put an alert just on that break level, maybe there. We want to know if that thing starts going down. So trade possibilities here are goes up, stays up, creates some origin levels in here, and then we trade those. Or we come down. This one's a nothing, but that one, that's already an origin level. And we've got the range trend. And then we'd take that level and we'd target back to this whole candle up here. So that doesn't become a whole candle until this is a closed candle. So the time theory is that it's not going to do it in this candle. It'd probably do it on the next one if it's going to do it, or the one after, which probably lines up with New York, New York. session and American Financial Macro News. Getting set up now to dump down and wick back up. Okay, Farcoin. Yeah, this is just bouncing. You're welcome. So yeah, nothing's changed on Farcoin. So either we get our origin entries or our refined entries. No, I'm just going to take level by level. You know, it's like this here. If you'd entered when it recaptured the range trend and you'd targeted the break level, you would have got a trade between 36 and 39. And then two things happen after that. It either hard closes the break level, retests it and goes up, which means you could always re-enter where you TP'd once the level is confirmed as support, or you don't. You just it doesn't hard close it, which is what happened, and then it's come back down here. And this level down here is support because it was hard closed by these two candles in here. So, you could just take your TP here. And sometimes you just, with FOMO and like the FOMO is like, oh, look, the price has gone up higher and all this kind of stuff. And yeah, okay, maybe you could have found a reason for that. Like, I guess you could have said that it's going to go to at least there because then that's going to be inside that whole candle wick, and you could try to refine that or something. Like there'd be a way, but if you just want to keep life quite simple, TP at break levels and then wait, and if they hard close, re-enter on the break level. And sometimes it might go up really high and you'll feel absolute FOMO, but it typically comes back down. And if you're trading across multiple tokens and one of them doesn't come back down, it doesn't matter because the other 9 will. So see, I am less inclined to just open a large swing position because I just think that they've spent too much time here and they're letting too many people come in. So I think I'll just scalp the support levels and then close into resistance and wait, and then open again and then close into resistance and then wait. It's also much better for your mental health to be able to sleep at night. This is somewhere. I think I posted it in the Discord. There's a just gonna see if I can find this picture. I don't know. Don't know if you can see that very well, but that's something else that some very, very big brains are working on, which it works on the concept of how price reverses and how it creates a range after reversal, and effectively finds the as close as possible the tops and bottoms for reversal, price reversal. So, and it did not spot the October 10th. So it got you to sell out up there, but the yes, even based on that logic, you know, entry, exit, entry, exit, entry, no exit, dump. So, but if you work out all the numbers on that, super conservatively, like not faking the ROIs, working off the candle closes, the worst prices, it's about a 500 and something percent compounding over that time period. So it's so that's effectively trying to figure out exactly, spotting exactly how trends reverse, which yeah, that stuff makes your brain hurt. So it'd be kind of cool if we do get another cycle, because some of the learnings from this one um, and the previous one put all together, pretty cool to buy bottoms again and literally sell tops and bottoms on every piece of daily structure for a year or so. Right. You want to look at anything? What's Esther up to? Bummer. Look what we missed. Guess we were sleeping. Or I was sleeping. That might break trend. In 24 minutes. So S has got a hold level. It's trying to break the trend. If it breaks the trend without the wick, may come up. Or that. That's a pretty good start actually for creating a range. Just want it to close up slightly. Yeah, so if that closes up with no wick, it'll be over that, and then might get along. or the other option is to see if it dives back into, there's a whole string of origin levels down in here. Okay. Yeah, yeah, there's something has changed quite a bit just in general in the market, which is probably just a result of there being a lot more open interest and money in it now. Pretty missed that too. That's plain as day. So that's a um, first touch range trend pushing into the hold. So, um, yeah, so there's a lot of tokens are just tapping wicks and running now, whether it's upside or downside. Actually, that's probably going to bounce the trend of the hold. You could almost just open a swing position on that. Okay, so 0.9. So that's the greediest point of the hold level. So typically hold levels are bodies, and price normally goes into bodies. But what I've seen a lot of lately is that price has actually just been rejecting before it even touches the body, almost like it's getting front run by large amounts of overeager money. So considering we're in a pretty volatile state in the market, I've just been looking at using these as absolute conservative places. So, I mean, what's kind of going on here is basically just you got a trend, and we're bouncing on the trend, and when you bounce on trends, you typically target holds. So the other trend is far enough away that it shouldn't get in the way, and it's a pretty basic sort of move. It would have been better to get it down there, but Yeah, so yeah, exactly. Basically, what we're seeing is we're seeing a lot of this. We come up to the wick, we reject off the wick, we go and stuff around for ages, and then we come up to the body. Okay, and the body has the confluence, with the other time frame levels. So it should be going to the body, but there's just so much of this happening at the moment where there's just instant cell pressure when we hit the wicks. So just not worth it. Maybe it goes to the body anyway. Great. Didn't make as much money. Maybe it rejects down. We get to take it again. So yeah, and that's actually that level there, 6 hour origin level. So there's a ton of support sitting around this spot. Hold level tested. This could actually just pop up to this range trend even. Good old Asta, eh? Retire on Asta. Just has to get over that trend. Backside of the trend is roughly about where that wick is. So it's not so bad. Taking a TP there, looking at that. But it hasn't hard closed it, so it could come back up inside there. It's been tested. Yeah, so it's up over the top of the 15-minute break level. It's got that range trend there, but it's had a first touch rejection. And it's closing, what's it doing? Its first touch of that break level. And in 14 seconds, it'll have a backside hold. It's that level there. And it's over the level where it can create a range. So it's just under that bloody range trend. Come on, let's go anyway. That's why we don't like range trends. So if it wants to build a range of this configuration, it's not going to come back here, and it's just going to stay above that. If it does come back here, it could bounce back up, but then it probably won't create a range off that. It just means that this candle down here is actually the one that's creating the range. So that's your, so this could be the base of the range, in which case you're at the top of the range based on this being the base of the range, and just trying to get over the top of the range so it can break out, create a new one. The blue candle also considered as a hold. Yeah, yes, it is. It's a different type of hold, and you've got to look inside them and be a little bit more picky about your entries. But so it's 15. So you could maybe take that as sort of like a greedier entry. Because the main problem with these types of hold levels is that they've normally been tested by one of the candles that's actually in front of them, which is like this one, tested that. So you should always look for better entries inside of them, which would be top of that candle or that one there. And yeah, you can dig into them and find that every single possible time frame has been tested inside of it, in which case it won't hold. So it took me a long time to figure out why some of them worked and some of them didn't, and then it was a case of just, is there actually anything inside of it that can support price? Come on. Don't know what that yellow line is. Oh poop. Come on. Don't reject on the origin. It's not the first time. Go. Yep. Yeah, so fractal. So um, because it's got multiple candles inside of the after the actual blue candle, and those candles could have gone up and down during their life, they may have tested every level inside that blue candle, which is kind of, because as soon as you've got two candles, you've got a range. So the same concept is why the candle that engulfs and often the one after that can't really be responsible for testing the hold, but the next one can be. So if you've got more than two going up and down, you got to look inside. Stupid 3-minute origin level. Oh, I got my TP anyway. I slightly. How did I do that? Oh, I front run it. Of course I did. That was lucky. Okay. Okay, that's my TP. That was purely by accident. Still, win's a win. Just wait for it to find a support and take it again. See if we get that greedy entry, eh? Oh, I might be able to try and create a range. Okay. So if it just holds this level, it might be trying to push higher. It's kind of just, once again, another example of TP at break levels. It's break level. So it's Yes. No. Don't you dare. Oh, you pain. Come back down. See what I mean by these things are just bouncing without. That technically didn't touch the wick. Got probably within a third or fourth decimal place of it, but it it's hard to be. It's hard to kind of be bearish when you look at some stupid altcoin that bounces without even hitting a hold level. It's like people are just hitting the market buy button. So we've got a origin creation on the 60-minute on Sol. Just see if we get this greedy entry here. Ooh, thank you. Pretty much. I've got enough of a collateral pool though that it doesn't really. I could let this thing run to zero and it wouldn't hurt. It's just still only 1% per trade, risk wise. And in the case of this one, you'd sort of expect that it could come all the way down to here, being the actual hold of the range. And timing wise, you're looking at 12 minutes. You've got this break level here. So if it closes under the break level, you might readdress where your TPs are. Basically just bouncing on the entry now. Come on. Stop with sell pressure. BTC is coming down, which isn't helping. Okay. Isn't it amazing what a 3-minute origin level can do? Sol up to? So we've got this level down here now. So 192.693. Line 3. Hype still looks really strong. Filecoin still looks really boring. That's creeping its way down slowly. BTC and Sol are both kind of pushing down. Might be about to get a bit more dumpy. See how the candle just keeps jerking down? So there's someone just pushing the market sell, market sell, market sell, effectively just trying to ram this thing down. So this is what price action looks like if they're trying to hunt liquidity. Just bang, you just get jerk, jerk, jerk every time the candle tries to go up. Okay. Come on. So it should either bounce up off the range trend or it should hit these origin levels down here. What's everyone up to? Chilling. Come on. Okay. Just going to exit the amount from here, just in case it goes back down and hits these lower levels again. Pull back in. Guess everyone's fallen asleep. Okay, that's boring. This area here roughly lines up with a band of 100x leverage on Sol at the moment as well. So they're probably going to create a reason to go dip. Come on. Spent enough time down there. Time to go up. Yeah, I think Asta is gonna either stuff around for ages and then bounce up, or it's gonna maybe stop me out. We'll see. So the cake is getting denser. So it's starting to fill the gaps around the price. Come on, retire on Asta. Hurry up. Definitely starting to wonder if I should sleep during the day and just do this at night. everything seems to happen so much faster. Hey, the YouTube algo just recommended me my own live stream that I'm talking on now. It's kind of cool. It's probably like the one good thing about living, if you're a trader and you live in a time zone that kind of lines up with the New York market, you'd always be awake for it. Right. I haven't looked at it today. Yeah, it's about to hit a 3-day hold level, so it's not the end of the world. Looks like you've got an origin level sitting there, waiting on the 3-day. So that could create a decent bounce. It's definitely pretty close to death if it falls off that. So 0.006793 would be the place to consider entry. And you just look to double check these levels. You'd probably be able to get up to there if it felt like being kind anyway. So it's not too bad. Lazy 50% if it just bounces between the bottom and the first equivalent resistance. Okay. Just going to TP some more of that as to scalp. Okay, see where that goes now. So if it rejects off this whole candle before hitting that target, then what we've just TP'd into the hold can re-add when it finds the trend or the origin. Otherwise it's just going to complete if it keeps going. Come on, you can do it. Come on, a little bit more. Okay. The amount of times I just watch something sit, just ping a limit order is frustrating. Yes. No. I swear the tip of that whip just go on. Yes. Could you almost think, thank you. Now I can fly up. Another big cell wall's out of the way. Sometimes you just think that there's no damn liquidity in there. That was a 5-figure order on 6x leverage. And it just wouldn't fill it. And now that it's gone, the price will just keep going up because the sell wall is gone. Okay. What's next? So we'll just wait and see if this bothers to come down. It's just being boring. Right. So just going to set an alert on the range trend, just in case it tries to come up to this and reject. This greedy, greedy level further down here. Just going to set up a small trade on this one, just in this area. Then add if it goes lower. Okay. So this is probably going to take a dive in 5 minutes if it stays around here. Two. Okay. Not so many people on the stream today. 7. Guess everyone's got a life. It's kind of tempting to reopen that. You know where it's going. It's got a whole bunch of resistance on other time frames. Yep. Yeah, looking for that for our origin there. So it might, because you've got a range trend there that'll protect it, it might hit the range trend, go up, and may not get a trade. But perfect entry would be if it wicks through to grab the liquidity and then comes back up. But it would be, this level would be a really safe, like for a first TP, and then you'd probably get up to here or to the hold as your second. And it's nicely away from the trends, so that's good as well. So it's not going to run into that trend trying to get back up. So it's a pretty good place for them to dip into. They may even come all the way down and hit these lower levels, like if they get really aggressive and just hit the magic sell button and just wick all the way down here. You'd kind of have to look on the heat maps and just see if there's any big liquidity inside this area. Not too worried. If it wicks all the way down here, it'll still end up profitable. It'll come back up. Just could have been more money. Could actually just sit orders on these and just hope for the best and catch as much of it as possible. Don't need to be too greedy. I'll do 60 minutes. Trends moved, holds created. So, right. So try and scalp. Just the area there, really. It's an interesting one. It's got a untested range trend up here at 94, and now we've got one down here at 93, untested. So great, absolutely great configuration for a Darth Maul candle. Sweet, sweet. Jokes on everybody. Right. I might go and make some food, but I'll just leave this running, and if anyone's got any questions, just chuck them in the chat. It's going kind of slow at the moment. What's going on? Chicken tenders are cooking. Such a stereotype. Okay. I need to find some other tokens. Yeah, chicken tender. Yeah, chicken tenders. They're going to be, sliced and put in a wrap with avocado and various other bits and pieces. And then I might have to have a bottle of vodka delivered to the house because I'm out of booze. But that's a problem. Such a hard life. No, I just put them in an air fryer. I'm a pretty simple human being. Alien, whatever. Oven takes lots of time and it's really big, and I don't need to cook that many. Okay. Still just kind of doing nothing. Yeah, that's what that work's done. There's just all these levels that are perfect for taking entries on. We just don't know how many of them they'll dive through. Maybe they just touch the first one. Maybe they don't do any. Could already be up, but this it's like this time frame here. It's the perfect trade. Your hold level is above your 204. It's created this as origin support on the last candle. Range trend roughly lines up with your 204. You can pretty much just scalp anything from below here back up to here. But it's just when. When are they going to do it? And you just wait. Put an alert on it, and maybe just put it slightly below so it brings your attention to it before the price gets there, even if it's moving at a pretty decent speed. So put one to the top side, so that you know when you're getting kind of close to that range trend. Yeah. Whoops. From a scalp perspective, that's a $30 scalp, so it's not too bad. And this is already in play to come back up here. If it can push over the resistance, it's off, going to head up to 210. Yeah, I just like to have it as up or down. I get so many alerts, it's nice to have a little bit more info on them. It's a pity that it had a wick, eh? The touch. Like, if it can convert this into a 4-hour origin, that would be quite good. That's, it will probably get you back up there. Hmm. All right. Any other tokens? Got to be something doing something. pump. Look at pump. Oh yeah. Yeah, that's looking pretty all right. Pretty all right on the weekly, daily. Right. Let's see what we can find. Okay. So that might have an option for a bounce down here. It's actually probably gonna just go and tap this as well. So ah, or that, which would be way better, but it's got to get on the other side of the trend. Good. Nothing worse than kind of just opening a scalp when you know you're just near the possible TP. But it's still 0.48%. Try to short this. Trump. Yeah. sometimes you're really, really lucky and you bring up a token, you look at it, and you go, oh, there's a trade like Asta. It was just, oh, we know where that's going. There's enough, there's enough room. We're gonna make a decent amount, and then you just can jump in. Most of the time, you look at a token and there's nothing. It's you're too late, and so then you just have to set alerts and wait for the next one. And um, yeah, uh, yeah. So very, very subtly, this is an origin level down here. So it's 0.4546, and you've got a range trend sort of down here, which it might work through to the range trend. So you could always look to add a bit to the position. You'd expect that range trend to get retested at some point. So you might look at, if it comes on down, you might look at, say, putting a third here. Worst case, you just make a third on your trade, and then you put 2/3 down here, and then it'll bring your average down below the backside of this. So even if it spends too much time down here and turns that into resistance, you'd be able to get out. So it's change your TP. Just when you thought the Trump token was dead. Springs back to life. BTC might be looking to move back up to trend there as well. Okay, so this is a rejection level here. It's 7.862. Got a hard close break here that hasn't been retested. You've got a hard close break here that hasn't been retested. And you got the origin support of the range down here at 5.73. This is probably just going to liquidate everybody. At a guess, I'd say chase the Trump bump, tap this, dump. So this level and this level are equal. And so's that. And kind of that too. So those would sort of be your key levels in close proximity. If it sneaks a candle above that on the daily closes, it'll push into these two. But if it just taps that, chances are down to here. Yeah. Looks pretty trappy. Yeah. It does look like a good short first touch of that. There's basically no real decent trend either in close proximity, so even better, you're on the wrong side of the trend. That's if that is the trend, I suppose. Actually, what's this? Maybe on second thought, that might actually pop tomorrow if it stays up there. Yeah, that had to make it a whole lot trickier. Let's see what trends are like. Scamwick. Actually, might do this manually. Okay. So yeah, it might be looking to break trend. And it's already tested the break level. So if it broke trend, what would happen? So it could wick through there, grab liquidity, reject back down before the end of the day, retest the back of the trend. Or it could close a candle and then flip this old thing over here to support, and then it would pop. So it's possible that goes up. Sol's moving up. Chicken tenders diced in a wrap with avocado, salsa. It's like fancy tenders. Yeah, it may convert this to the top of the range, origin level, maybe if it doesn't go back to it next candle, and then you'll have your bottom and your top will start condensing closer to each other, which it's good. I either need Sol to go up a little bit more or one more skip. Yeah, most of the ones they're not. It depends what kind of fees you're on. Like the lowest fees you can sort of get to eventually is around like zero. Well, actually, some exchanges there's hardly any fees, but they'll probably also go out of business and take all your money. On most reasonable exchanges, you can sort of get down to 0.01 or 0.06 is about the worst, I think. So if you can find something that's, and it depends whether you limit in or whether you market in. So if you limit order in and limit TP out, a 0.4 move on reasonable leverage is still worth it. But yeah, they come up automatically, but you can dictate the percentage. So, e.g., tick that box, don't bother to see ones that are less than 0.4. It's not really mine. I'm helping other people develop it, so it will become available. I don't know when. Hopefully soon. There's just some little things, and it's not the kind of it's not the kind of indicator you want to just give out to everybody without actually teaching them how to use it properly. Stuff like the hold levels, as an example, the hold levels can be activated and TP'd in the same candle if the market is really volatile. And TradingView's got lots of very stupid limitations in how PineScript works. So the current version can't see that that's happened because it can only really tell what's happened in that candle on the time frame you're on. So there's things like that. Will we be able to pay? I guess so. I don't know. I don't. It wouldn't be very progressive to make a crypto trading thing where you couldn't do that. I'll ask them, but I'm sure that would be fine. These days, pretty much crypto is normal money anyway. The amount of stables that are on blockchain that aren't being used for anything to do with crypto, well, crypto risk assets. Yep. And also just some things to do with the alerts, because it can fire off just multiple alerts in regards to the same levels, because the same level might actually, like this whole candle, it starts out as just a 1v1, but then it becomes more when you get a range forming after it, so it'll alert you more than once, which isn't too bad. But then if it gets activated, you might get like 3 alerts at the same time because it's got 3 different things. So there's just stuff that like that kind of needs to be fine-tuned, but none of it's catastrophic, and it works. From my perspective, I think probably just the biggest the key things will be the time saving on trends, the alerts on trends, because previously what I would have to do is I would have to go in, put the trend line in, put the alert on the trend. Every time the trend moved, you'd have to move the trend, which would reactivate the alert if it had been hit previously. But you would also have to, if you had a trend that did alert, you would have to go in and you would have to just either move it or redo the alert. You could just move it up and down, put it back on the same candle, and it would turn the TradingView alert back on. But having that kind of stuff that just dynamically changes the trends and then actually dynamically therefore changes the alerts, or the break level conversion to origin, like you could pretty much just find a hold level, set the hold level indicator on a lower time frame, and then just turn the alert on it. Like so maybe like you're going into a daily hold level, so you just turn the alert on the 3-minute time frame and go watch TV. When the 3-minute time frame builds an origin and starts reversing, you are now suddenly interested in actually trading that daily move, and you've probably caught the very bottom, which is effectively how that other thing works. That thing that picks the bottoms and the tops on the daily chart. It's using a series of events that happens from the very lowest time frame upwards, and once it's jumped through a few different time frames, it establishes that the price is genuinely reversing here, and we are traveling in the other direction. And it's not a retrace, because retraces leave break levels, but reversals leave origin levels, because they start forming totally different ranges. So it's once you sort of put it all magically into code somehow, it becomes very helpful. So Hmm. So I've just been running Sol like this for several weeks now, really. 15-minute setup with all the alerts, and then 1 hour, 4 hour daily, and you can pretty much sit on the couch and you watch the alerts come in, and you actually know if you know what they mean, you actually know what's happening on the screen without even looking at the chart. Oh, yep, price is reversing. Oh, yep, next time frame up has created a hold level. Our range is evolving into a higher time frame, and that sort of stuff. So. Meanwhile, our daily is still just paused. Yeah, it's so this is the kind of thing that in future you'll be able to have it set up across a whole bunch of tokens. Yeah, you'll be back here. You'll get an alert that tells you a break level's been hit, and you may or may not care. Yeah, could mean the price is going down. You might not even be bothered trading. And then that candle, when that closes, it would tell you that there's now an origin level. Now you'd be really interested because you've got a daily origin level. And then that would tell you it's been touched. You'd come along here and you'd go, okay, cool. We're still down here. Let's open a trade. It's going to go up. And off it goes. Target the break level. And then next alert you get would be this one here, which tells you it's touched it again. You'd also get this alert as well. You get this alert. So same thing as that side. It'd be break level's been hit. Break level's been hit. Origin level's been created. Time to take a short. Back down to here. So if you took the long, say from when you got your first alert, which is there, so 1, 2, 3, 4, 5. So you take it there. 5 days, 5% move. 1, 2, 3, 4, 5 days, 5% move. 10% in 10 days without any leverage. It's not bad. I am mainly using Hyperliquid. Oh, yeah. I don't really know what their fees are like. I can't say I really tried a lot of dexes in a while. I did in the early days, but they just didn't really have the uh, options that you could get on a sex. Especially if you wanted. I mean, I don't, maybe it's different now, but like on say on Jupiter, you could use your Sol as collateral, but it converted your Sol. And then, of course, if the price went up and it bought the Sol back, it'd be buying less. So you're not really making as much money off the trade as you thought you were. And that's not really that ideal for a bull market. Currently I use BitGet. So I've used Binance and Bybit and OKX and Mexi and BingX and HTX and used a few, but probably use more than that actually, now that I really think about it. But yeah, BitGet now, it's just the way that they manage their order book is really good. They don't leave displacements between open and closings of candles, so you can get very, very, very accurate entries, and you can be pretty sure that if a level has been hit, it has been hit. If it's been slightly missed, then it means it hasn't been hit. Whereas a lot of other exchanges, there's displacements. Like if we look at this BNB chart on say like a 1 hour, show you what I mean. Let's remove all that stuff. Okay. Now let's find another BNB token on another exchange. Let's try OKX. Okay. So when you look really, really closely at these, you get something like this, where the top of both of these candles is exactly the same number, but when you find the same thing here, the top of the candles can be slightly different. So they're out by 10 cents. And as stupid as that sounds, that means that you may or may not know that a level has actually been hit, because they can be out by way more than 10 cents. Like sometimes they can be out by, 6 cents, 10, sorry, not 6 cents, 60 cents. They can be out a lot in some cases. So, and the other issue is when you're dealing with groups of candles is that, like, if you look at this string here of candles, they're just about all incorrect, all offset. So mathematically, when you're working out fibs, you're taking 2 points the difference of and you're multiplying it. But if you wanted to try and, like, I struggled for such a long time to figure out how to get multi-candle fibs accurate. They were always either going past the exit or entry, or they were stopping before. In the end, I just started doing things like, okay, I'll just take $1 off it if it was a high time frame, and just front run it. But even that didn't work. Like, I missed the 295 top by $5 because it was like 300 and something, or there was over 300 candles in the fib calculation, and so there was enough differences between 300 candles that when multiplied by the fib level actually made a $5 difference to the price between 295 and 300. And so yeah, so I started using BitGet because they smooth out their order book. I mean, pretty much, without sounding like a complete tin hat conspiracy theorist, it's all rubbish. Like what you see, these buys and sells, most of them are just auto-generated. They're bots, they're algos, that kind of thing. Their ones just work better. These ones aren't actually doing as good a job to get everything perfect. So, yeah. I used to think it was liquidity, or lack of liquidity, but then Binance has these problems, BitGet doesn't. Yeah. So, like, if you've got something you're trying to figure out as an origin level, and a candle has got really close to the line but didn't quite touch the line, well, then on OKX or Binance, it might have actually touched the line. It just doesn't look like it did. And then on BitGet, it really hasn't touched the line. So yeah, that's kind of why I prefer it. Ultimately, just very geeky stuff, and All exchanges pretty much offer the same functions, features, you know, rewards, all that kind of thing. Mm-hmm. Yep. Okay. It functioned. Like there was no drop-offs in it, but same as every other exchange, really. It still ADL'd and insurance fund got emptied, and then they had to automatic deleverage everything, and so I didn't have a unified trading account, thankfully. Um, I've never bothered to upgrade to one of those, so that was fine. Effectively, the trade that I were in was isolated, so it's but yeah, I suppose if someone had had a unified trading account and got liquidated, it was no different than anybody else. Did it do? Okay. See if we can get this thing to reverse. Yeah. It is pumping straight into a whole candle though. So it's not necessarily gonna keep going up. Do you like Trade of Home Sea? No, not particularly. It's definitely a very risky time to be taking out any big positions, but I'll definitely I'll definitely be involved. I'll look to see whether or not they do something really stupidly obvious, like sweep one side and then start to reverse to the other. So we'll just watch this thing go up and see if we get a reversal, and then if it comes back down under here, whether we get continuation back down to here. It's created a range trend on the 3 minute, so it might be, but it's over the break level, so we'll just see if it closes under the break level. Might be able to short this. Come on. It's funny just watching it. Goes under the level and then just ping back up. Under the level, ping back up. Not yet. Yo. Okay. See if we get a hold level. Yep. Nearly. Cool. All right, so I got a hold level. So if you're trying to figure out whether something's reverse trend, basically you want a hold level and then another hold level. And at that point you are you will have two accumulation candles, and two accumulation candles would mean that you have a trend in the other direction. So at this stage it's still only one hold level, but we'll see. Yeah, so it needs, for it to be a genuine 3-minute hold level, it needs two candles, but you wouldn't expect a 3-minute reversal to begin the reversal, if that makes sense, because you don't just magically become a reversal on a 3-minute. This will be like a 1-minute reversal if we go deeper or something like that. So there you go. So if you really wanted to break it down, you would actually look at it from this perspective, and you'd see that we hit an origin level, we created a new origin level, we created a hold level and a range, we rejected the backside of the range, and we created a hold level. And then as this evolves, this will become higher time frames. So the 1-minute reversal is already in play, and then what ends up happening in 42 seconds is you've got the opportunity to then have a 3-minute range, and then that develops further as well, potentially, if this closes down, this blue candle, or if this candle closes blue, which it quite often doesn't. Quite often what you get is you get one and then you get two, because what's in there is actually the first range reversal, which is a lower time frame than what we're viewing it on. And then as that time frame evolves, this becomes two because it's a bigger time frame. So I don't know if I can spot that, but it'll be something here, like here. It starts as, so when it hits this break level and it goes to reverse, so it starts as one candle because that is not a 3-minute range, it's lower, and it's the beginning of this reversal. And then that becomes a bigger range because it evolves. It's the fractal way of looking at time evolving on charts. Yeah. So, and then of course we run into this lovely little range trend down here. BTC's going up, Sol's going up. And Pump's trying to go down. Great timing. So what you want to see now is you want to see another hold level create on this yellow candle, a loss of that range trend, which could create another blue candle, and then you probably get a bounce off this break level or this little baby origin thing in here, and then once it loses the origin, it accelerates the time frame, so it could become something bigger and then find its way back to the target of the short if it's going to go. What time frame was that even on to begin with? Was that time frame? And so you have to keep an eye on things like this trend running through here, because if in 2 hours and 42 minutes this is still above the trend, it probably won't come back down here. It would probably hit the backside of all of this and then bounce. So, and you've also got BTC going up right now. Great time. Here we go. So then if we close this yellow candle with a wick, then we get a range trend, which is on the 5 minute. So, so you can see 1 minute started the reversal, kind of moved on to 3 minute. 3 minutes trying to kind of hold the price up off a range trend, but 5 minute might be about to create a range trend that, if the wick is appropriately sized, it can reject off the underside of it. Then it's going to target the hold level. That brings it down a notch, and on and on and on it goes. It may still break out to the top because it could open that candle above. Generally speaking, you kind of want to see about a 15-minute um, 15-minute break of trend or break of structure if you're going to take a trade on a 4-hour level. But you didn't get a whole candle to the upside, so that's good. Yep. Yeah, they're auto-populating. Yeah. Yeah, there's various meanings to candle size. So this looks like it's already broken up out of that lower time frame range now. So go back down. Yeah. Okay, so the 3 minute basically got support off the range trend and kept going. So it might have to come up to something in here maybe. If it doesn't lose this trend in the next 1 minute anyway. Oh. Good night, sir. Okay. It's definitely strong. Doesn't want to die. Yeah. Sol's about to swipe some liquidity from the looks of it. It's just creeping into that 195 plus area. No worries. Yay! Creates range trend, opens on the wrong side. Go down. So you can learn a lot by watching 1 minute candles. It's basically just identical to every other time frame, just faster. Yeah, I've opened a little one. This is kind of a second attempt at reversing. So it's attempted there, found support there, doing it again. So it should hopefully fall over. Maybe not. Come on. Maybe there's a lesson called don't short a token called pump. Yeah, it's good. Got a break level, going through the break level, testing the base of the range. If the base of the range fails, then it'll collapse down to the next range, which has already been tested. So if it fails, bye-bye. But it doesn't. Not yet. So if you like, consider that these two candles up in here, that's an accumulation range. this is also an accumulation range, but it's an accumulation range at a lower price than what that one was, which means down here people aren't willing to pay what they were paying up there, and that's kind of like another sign of price heading down. So then it finds some kind of, it builds a range trend, and then now we're stuck in between this, and it either recovers or it loses it. Yeah, BTC's a tricky one. So one of the closes that we've got on, or one of the levels that we got yesterday on BTC on the 30-day allows it to go to all-time high. But it's kind of one level. So there's everything else says down, and one level says all-time high. And it happened to be the level that we actually bounced off today when the price dipped, which is a bit interesting. So it was 112523. So yeah, I don't know. It could be quite interesting if out of every single possible move, that one particular move plays out. But I think the actual rejection close today was like 114 or something. Yeah, it was about 114, 100, I think. This. So you got this 43-day move, which anywhere past 114, 151 could reject the price. And it's got an untested range trend down sort of around 100K, and break of the range is, just down here and so on, like lower targets, blah, blah, blah. But we did have like a 30-day, it's almost like a flip of this that points to the top. So, and that closed yesterday, I think. So, um, I think it was this. Yeah. And we've just bounced off that hold level today. So we've got this, which points at 127, and we've got the 143, which is pointing sort of 100K or lower. So honestly, your guess is as good as mine. Which one comes first? It's dying. Okay, it's going to break this trend. Yeah. So we've also got like a move in Sol today back to 206, and potentially we're creating a daily range back to 217. We've got a rejection candle at 214. So just a we've spent so much time just stuck in this stupid area that the structure is just all over the place and condensed, and just don't really, I don't think anyone has a clue whether it's going to go up or down first. But I'm pretty convinced we're not in a bear market yet. Ask me in another week. Do you have a problem because you're tuning in from a work conference and ignoring work, or have you got some other problem? So you see how the trend shifted to the underside, and then the candle just bounced off the trend and went up to hit the hold. Then the topside trend moves, but it opens kind of just above it, so it's 50-50 whether it goes up or down. But it's created a hold level here, so we've got to break that. That's kind of why like the wick on the candle makes a difference with the trend, because if they're parabolically trying to dump the price, what they do is they close the candle on the trend with no wick, and then it opens directly on the underside of it and then bounces down. And then they do exactly the same thing on the next trend, and so on and so on and so on. And it's so it's kind of like a style of price action where you just know that they're just absolutely going deep, like they want to try and find some lower liquidity, and they want to get there really quickly. And then you get stuff like this, which is just like, oh yeah, we'll make some support, we'll go up, you know, then we'll open kind of on the wrong side of a trend and just stuffs around. You don't really know what they're up to, whether they're trying to go sideways or keep it here, or trick people into longing so they can go down, or maybe they're just going to pump. Just don't really know. But yeah, making hold levels typically means it's going up. They haven't retested this range trend or that hold level yet, so it's potentially what they want to do is go up there, hit those, and then maybe reject. Addictive streams. Illuminate. So if they close this candle down, then effectively they're creating a hold level to the upside. If they push it below these two trends and then open the next one, then they're creating the ability to reject further and faster. Then it's got a break level, and if the break level converts to an origin, then you get another bounce, and if it doesn't, then it'll get underneath it and dump. Okay. Rejection off the backside of trends. So for a parabolic type fall, what they do is they hold the candle here and they don't let it go back up above, and then they can reject off the backside again if they want to. So it's all about positioning and works. They may even be going for the next one. So once you lose a range trend, basically the candle has to go to another area capable of making a range trend, which would be more or less another hold. So when you lose a range trend, if you have this huge string of yellow candles, and that's what you'll see before news events, you'll see these just creep ups. Like you might get like 7 yellow candles in a row, and then you get a range trend at the top, and then they'll lose the range trend and they'll dump all the way to the bottom real quick because there was nothing left there to actually create the opposite side of the range. So they just dump. Yeah. Well, at the end of the day, you still haven't completed the short, but this is sort of what price looks like when it reverses. And so if you zoom out and just look at it like a 4-hour candle, it's just a 4-hour candle bobbing up and down right now. Or the wick is getting slightly bigger as the candle pulls down. But you look inside of it, and this is what's going on. So recaptures the break level. Yep. So there's other little subtleties that like this one's so far quite confusing, but if they're going to try and create a range and break it in one direction, normally they'll make sure that there's a hold level on one side but not the other. And if they were going to break down, they wouldn't want there to be a big wick on this candle. So they basically want that candle to close below the body or wick of this one. And with very little wick or no wick on it would be intention to try and break down. Whereas this is quite neutral right now. It's going to be able to create some support maybe. Oh, there you go. Not neutral anymore. See? It's more economical to do in the last 1 second of the candle. Funny. So that's a 1 minute example of why I always say that the entire time a candle is open is noise, but how it closes or the way it is closed means something. Kiss goodbye to it again. Until it gets to the next level. Or if it recovers this one. Yeah. It's a bit like that sometimes. So then there's other interesting little effects you get with price action, like when you get condensed trends. So when your interior trend more or less reaches your exterior trend, you can then have quite a powerful bounce or dump, like depending on what side it ends up closing on, because it's sort of like you're losing two or bouncing off two. So so yeah, pretty much if you ever start losing interiors, there's not terribly many times where losing interior trends ever actually recovers and goes up to some new high. Normally, you'll just keep losing interiors until you reach the exterior, and then you might have the juice to bounce up to create a new high. But it doesn't normally happen the other way. All right, it's pause time. We're on the trends. So bounce or die. And straight down to the break, and then bounce. Is there any reason why the exterior will stop the dump or pump? Yep, because it's older. It comes from a further back place in time. So the strength of trends is to do with time frame and age. What's your criteria? Like this level is probably about to turn into an origin if that candle doesn't come back down. Um, so I would normally just scalp the first touch of the origin, and I would typically take it to whatever the first hold level is, or break level if there isn't really a hold level. And there's no real criteria. Uh, it would be the first touch after creation. And if the candles that created it stayed up above it for a while, then I might look a little bit deeper to see if I could find something more precise. But if they pretty much just touched it and dumped, and then the next one will just touch it and dump as well. Mm. Yeah, so this is now the base of the 1 minute range down here. And this is the top side. So this is going to try and get back up here if it can get through this hole. And if it can't get through the hole, it'll go down. And whatever blue candle goes down will create some kind of hold. And that just keeps laddering until eventually something breaks. There's your range trend. Waiting. Hmm. Okay, so it's got an interior uptrend, but it opens on the wrong side of it on creation. And it's got a range trend, so it's got a couple of forms of resistance there now. And this is effectively like how wedges get formed. And then you've got to break one side of it. So yeah, you get the opposite when you've got like really parabolic bullish price action, it'll just be create a new trend, open on the other side of it, goes up, no wick, trend moves, opens on the other side, goes up, no wick. And it'll just be like boom, 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 boom. 100 to a million. Oh yeah. 50,000 to a million is pretty easy. 100 to a million is probably not. It's just it's hard at the start. Or you just take a long time to do it. I used to just do 1,000 to 10,000. That was even that's kind of a little bit, you know, a little bit hard on the old nerves sometimes if you're doing it in just like 100% risk every time. Then I started to just chicken out a bit, and I just do 200. So take 1,000, just do 200, make 400, and then take the 200 back out, and make 200, 400 again, and then once you've done it a couple of times, go 400, 800. Once you've done that a couple of times, etc. Yeah, don't know what it is. It's just 10x. It's not a huge risk. Like, so leverage is just I don't know. Did you see the video I did on how or what leverage actually means? It's pretty much just relates to your risk. So it's got nothing to do with uh yeah. I'm getting tired. Hard to explain this. I did a video on it. What you do is you work out what you're willing to lose on a trade based on where you think your invalidation would be, and then you have a look at your account and the percentage of risk that you're willing to lose. And then if you do not have enough money in your account to actually create that trade size, then you use leverage to create the trade size because you believe that you can take that risk, but you don't have the base capital. That's kind of the point of leverage. Um, so Really just doesn't want to go down, does it? Hurry up. So once you've created the base of a range, you typically go and test the top of the range. And one side or the other gets broken. The way it's closing up above these levels, it's trying to, but I think the range string got it. Yeah. Oops. So the range trend should try to target the prior range trend, which has been hard closed, unless it spends too much time up here, in which case it will just target the break or the backside of this trend. It may just get stuck in that little gap until it breaks. Yep. So this is now quite bullish based on a 1 minute candle. Oh yeah. We were pretty close to hourly close. So there's probably something on the hourly that they were trying to do. Interesting. Oh yeah. And then the whole process just starts over again with hold levels, engulfments. At some point there'll be different trends. So basically the job of this hold level down here at the bottom is to try and keep the price laddering upwards, and the job of this hold level at the top here is to try and keep it laddering downwards. The fact that we haven't hit this hold level at the top here means that so far the top is kind of winning because it hasn't been touched. And yeah, that's us. Live stream collab with Marty. Yeah. You could be like, Marty, is it going to go up? And it'd be like, yeah, it's going up. And then when it goes down, it'll be, oh, I knew that was coming. It was going down. Okay. Sure thing, Marty. Okie dokie. Let's lose the trends finally, please. So it's rejected off the top of the range. If it starts to lose all this stuff, then it'll come down here and try to break this. Then if it closes under this, chances are this will bounce first time, but if it closes under this, then pop. It should be able to have a bit more of a move. Stupid trends. What I would love to see would be a debate between Marty and the CEO of Wintermute. Like that would be awesome. Because he invited him. He basically said, "Send me an actual list of transactions that you believe are us manipulating things, and obviously send him that list in advance so that he actually can, get all the information about them and what they were for, and permission for privacy if they were to do with other parties, etc." And then he would actually come back to him and be like, "This is what these are," and that would just be awesome. Ooh, it's got a hold level, but it's stuck in all the trends. Ah, go down. So you can kind of tell now based on this how ranges compress, how they have like a hold, various other holds, and then you'll get something like that. Another one here now, one here. And if they just keep bouncing off whatever the latest holds are that gets created, they effectively just end up going like that. And that's then how trends break. Because if you've got a trend coming through there and you keep condensing the price and just keep it sideways so that it can't go up the trend, it has no choice but to go through the trend, break, and go down, and or opposite on the upside, obviously. Hmm. Yes. Buy trend. Under the break level, test the base of the range. If it goes down any further, range trend, go away. Why? It's like they just hold on for dear life. This would be good on the timestamps. Sin narrates a 1 minute chart for 1 hour. as it creates entire ranges, breaks trends, does everything. Yeah, yeah. Consolidation is so consolidation on one time frame is price ranging on a lower time frame, but it's been held sideways. And if the candles are getting smaller and smaller, then yeah, you're or the price range is getting tighter and tighter, then you're effectively doing that. There's lots of different ways price can consolidate because it can consolidate in a direction as well. So you can have something that kind of doesn't look like ranging, but it is producing different lows, but still consolidation. And or it can do it upwards. I mean, imagine this. You have a range, so one, two, whatever, bad drawing, but you have a range down here. And then imagine if the price just did single candle, single candle, single candle, single candle, but it was actually going up with single candles. And then, and this does happen, this is like a very obvious trap, right? Then it gets to the top, and then it goes one, two, one, creates some kind of trend, and there's some kind of trend here, and then it loses this one and goes straight to the bottom because there's nothing in there that's equivalent to that or that. Yeah, it is. Oh, it's not that nerve wracking. You get used to it after a while. That's how I learned a lot of stuff was just time on 1 minute charts because there's if you look at that, is it not just a bull run? Like you've had your big move up, move down, blow off top, dump. What would you call that? You'd call that like a dead cat bounce, coming down again. You've just seen an entire bull run play out in a matter of minutes. Hmm. What are those little red dots? They're where the trend had previously anchored to. So if you're trying to see if it's recovering trends, because that's something that can happen. So the downtrend previously anchored to those. Yeah, yeah. They are basically great for education. They're also really good for spotting reversals. Because you're inside an area um, where you would expect price to reject based on the higher time frame structure. And so you start looking at it on the 1 minute or 3 minute or 5 minute charts. And if we flip this back over to a 15 minute now, we've probably got like, see, we're going to create a hold level on the 15 minute. And so the 5 minutes probably got some pretty good structure, or the 3 minute probably has. So there you go. You got created a hold level, came up, rejected the hold level, created what something. Didn't really. Hey, bye bye. So we're now at the bottom of the 3 minute range. Once we touch this candle here, which we just did. So this candle's the hold of the range. It's got to try and create. And that's the one you can kind of trade. If it closes above it, then bounces off the top of it without touching the whole candle, you can pretty much long it up to the 4. So that's the range getting created, the first move. And then this is it failing, the last move. Yeah, 1 minute reversals, 1 minute liquidation charts. Plus you can tell when it's going to happen. Like if you're sitting up inside a 4-hour candle waiting for the short to kick in and there's no liquidity in close proximity on the 1 minute liquidation chart, then go sit on the couch and watch a movie because it's not going to happen. That's the liquidity charts are great for timing. Okay. So yeah, so 3-minute range is failing. Back under the trend, it's got the hold down here, which is the next one to try and recover. It's at the exterior trend. Probably have to find an older trend now because we're effectively, the range is expanding, so you've got to find a different anchor for your trend, which would be something back here. There you go. Even that one's going to die, so we need to go back even further. There we go. Okay, and then you get a range trend. So any one of these points can send it all the way back up to basically any other hold level or anything. We'd probably retest that level. Would make a lot of sense to do that at some point. Yeah, those trends are cool. That's part of that suite that's getting developed. I reckon it probably saves me, I don't know, an hour or more a day just in having to count through candles. Saves me zooming in on the screen to see if the tiny little corner was touching or not. And there's a more complicated one too, which you can use advanced time array trends. So we've done quite a bit of work on this one where you can actually set your anchor points and your pivot points on different time frames. So effectively that same little trick that I use for finding the real accurate trend entries, but there's something that can do it itself. So, personally, I still find it easier to do those ones myself because it kind of you're only really doing them off high time frames, so there's not that many candles to go through. And for the amount of time it takes me to put the dates and times in for the candles, I can pretty much have done it anyway. But I'm sure for some people it'll be awesome, having been able to set an original timer rate anchor and then have every other. So what it does, you actually set the original anchor and then every other trend thereafter actually dynamically adapts off it. So that's pretty cool. The really cool one um, that's bugged me for ages is I get really annoyed by trend indicators, by ones where they show ROIs that you just can't achieve because they always take into account, the flashing of the indicator, and then they repaint them and they're not real. Like, or they look at where the candle opened, not closed, or that kind of stuff. And so, they'll advertise that you can make 500%, and you can't, because if you actually take the trade when the candle closes, it'll be half of them will be at a loss because they're just one candle's already gone past where the other one was, so you're already buying or selling incorrectly against the price that you previously bought or sold at. So those things really annoy the Jesus out of me, and we have got a working prototype of, so everything you've just seen here on these 1 minute charts scales over time. So you can actually see reversals happening from the finest point, and we can't get it down to a 1 minute because unfortunately there's just limitations with PineScript. But this, where is it? Um, dum, 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 dum. Loading somewhere. There it is. Yeah, so this thing is completely no BS. Measured, if you measured it in the worst way possible, like candle close, worst price, this thing is pretty damn good at picking the exact tops and bottoms. So, and all it is just kind of like what you're seeing happen now on the screen, but it's just doing it in the background. So it's looking for what the momentum of the price is on a time frame, and then it's finding the thing historically that can change it, and then it's watching the change evolve. And once it's evolved a certain number of steps, it says, yeah, okay, you're reversing. And so kind of excited about that. I've never really seen a semi decent trend reversal indicator that actually works. Okay. So if this 4-hour candle hasn't gone below this blue candle here by the time it closes, there will be a range trend form, and if there's a wick, it can reject off the range trend, but it could stop when it hits this candle instead of coming down here to the target. So it's we need this thing to hurry up and get weak and basically get below that. Let's use a box, eh? Don't use boxes very often. Need it to get below that. Hmm. 15 people watching. What's going on? Yeah. Yep. The really cool thing would be to just ditch TradingView completely, because most of the things that make it really hard um, are just limitations in PineScript. But there is some huge cost advantage in just using PineScript and TradingView, because if you tried to build an entire charting system off board, um, I mean, maybe for one person it would be fine, but if you had to get all the servers and all the processing power, etc., for a whole bunch of people, it would be pretty expensive overheads and running costs long term. Oh, nice. I like Japan. So, just to be really bearish, this is kind of what like Bitcoin's just done, right? We had a base of a range, we've gone up, we did that big October 10th dip, which tested the base and everything, and then we haven't really got back up over halfway. So that's the kind of welcome to a 1 minute version of what Bitcoin took a very long time to do. Yeah, well, I should go back to Tokyo. It's been a while since I've been there, but it was yeah, really nice place. Friendly people. Really loud underground nightclubs though. I think I lost a bit of hearing there. Um, how long did it take you to become confident in trading? Uh, I don't know, confident? Probably a while, you know. And there's still lots of things I'm not confident about, and if I'm not confident about it, I just don't take the trade. Um, if there's anything that I'm unsure about, there'll be another one that'll be cleaner, it'll be better. It literally takes 1 or 2 scalps a day to add a percent to your entire portfolio if you just pick the right ones. So why not just be picky? But you probably, yeah, I just didn't really have a choice. I had to start trading and I had to start making money for various reasons very quickly. So I don't know, probably hard to say how long it would take me to be confident. Maybe 6 months to a year. Don't know. I used to journal everything, so I just have an Excel spreadsheet and every single trade was in it. Why I took it, um, and what the outcome was, what I thought the outcome should be, what the outcome actually was, if there was any difference, why, like just those kind of things. And then every Saturday morning, when markets would be a bit slower on weekends, I'd bring it up on one screen. I would put it on. I'd chuck the replay tool on, and I'd go through every single one of those trades and see, is there something I could have done better? Was there a level that I didn't find? How did I refine it? Um, you know, did it go further than my TP? Was that consistent? And then you start to notice patterns both in your psychological state and also in just your strategy. And then you start to refine both really. Um, and then after a while, I stopped doing that because it just didn't matter anymore. Really, it's just you get to the point where you sort of are pretty competent in what you do, and the funny thing is most traders just all seem to make exactly the same mistakes. They either have a couple of good wins and then figure they'll, make a Lambo on the next one, and then they lose. Or they or their wins are small wins, but their losses are big because bad risk management or um, various other reasons, or just bad strategies. Or sometimes they just feel like they have to always take a trade, always be in a trade. One of the things I've noticed this cycle is, which is different from last, is that, and it's probably just because it's been so much rotation of money between narratives rather than actual real new money coming in across everything. Um, it's been that the longer you're in a trade on a token, the more likely something is going to go wrong, because at some point it's going to be harvested to pump the next thing. Whereas the 2021 cycle wasn't like that. It was just all up, all down. Yeah. It's a red day, buy everything. It's a green day, sell it all. You could have been an absolute muppet and still come out the other side making money in that cycle, unless you bought the top. Bad luck or inexperience. Um, this cycle, I sort of told myself the moment I saw a weekly origin form, I would just sell Bitcoin, and I'd only buy it if we hard closed the level. And so I think I sold everything at like 108 and then rebought it when we hard closed 108 and then sold it all again at 114. And then, yeah, I could buy it back now and it's cheaper. Not going to. See, it's slowly coming down. So this area here doesn't have a hold level on this time frame, even on a 1 minute. So it's cooked. There's one down here though. And we've got an origin level here, so we could bounce off that. Yeah. I drink so much less when I'm hanging out with you guys. Boy, go down. Oh, don't do that. No wick. Wicks are banned. So pure. Do I get out and exercise a lot? Not really. Nowhere near as much as I should. I have a gym in my house, but it's does not get used very often. It's an empty room. It's not an empty room. It's got stuff in it which I don't use much. So yes, pure means a true 2 candle range. Non-pure means you should probably check another time frame. Like example would be if you got 4 candles in a row on a 15-minute time frame and you get one 15-minute candle closing above the break level, do you know that that is a 15-minute break level, or could it be a 30-minute break level as an example? And have you closed one or two 15-minute candles above? And are those candles collectively accumulation or distribution if you looked at the entire period of the two 15-minute candles? So non-pure levels, you've sort of got to investigate them to see whether or not they are a pure level on a different time frame. If you want to know if they truly have been broken, that's or hard closed. Like I'm sure you've probably seen levels get hard closed and then the price just dump down below them again. That's the kind of problem that you have when you're dealing with fractals. Good morning. We're watching pump die on a 1 minute chart. Can you expand on pure and non-pure? Yeah. So specifically what? So a pure level would just be a whole candle and two candles in a range. And so if you got one candle, so say you're on the 1 minute time frame and you have a pure level, which this one, okay? Where is it? Okay, this level right here. So that's a pure level. It's got a whole candle, it's got two distributions, it's been hit, it's gone down. Now, to break that level to the upside, you would just need one 1 minute accumulation candle above that level, because we know it's a proper 2 minute level. Now, this break level, just below it, is a whole candle and then three candles, which means this could be a different range on a different time frame. It could be two candles on some other time frame. And based on that, a 1 minute candle up above it may not actually be a hard close of that level, because that level could be a bigger level. In fact, it is a bigger level. One of the ways you can tell prices, basically, the dump is getting bigger in time, is that you've got two candles, then you got 1, 2, 3, then you got 1, 2, 3, 4. See that? So it's time is through this period here, we had an escalation in time. So the reason why you might want to differentiate between pure and non-pure levels is just simply because if you're going to take a trade on a break of a level, you want to make sure you have actually broken the level. And one candle above a non-pure range on this particular time frame wouldn't necessarily mean it's broken. Likewise, if you ever have one candle, and another candle, the price can come above the thing that isn't really a break level. This is kind of why people actually don't think they're break levels. If you've got one candle, the price will often just go straight through it. But that's because if you're watching on a time frame where it's just one candle, you don't need anything as big or as long to there in that spot on the time frame you're on to break the level, because the level of one candle is actually smaller than what you're on. So break levels actually exist at the top of every single distribution candle, even if it's a single candle, but it's just not the time frame you're looking at. So this candle here has a break level, just not on a 1 minute chart. It'll be on a 30-second or a 10-second or something else. Yeah. And that's why it won't stop a 1 minute candle, because it's smaller than a 1 minute candle. So origin levels are only valid when created at the base or peak. Yeah, correct. Yeah, they've got to be a break level. They are a break level that becomes an origin level. We're good. Well, I am. Hope everyone else is. 26 likes. Hit the like button. Subscribe. YouTube baller. Actually, trends is another good example for that too. If you draw a trend on a daily chart and it gets a 1 hour candle over the top of it, it's not a trend break. It's a good luck Russian roulette. 1 hour candle closing over a daily trend. Bingo. Almost with the time thing. So yes, not one candle hard closing a non-pure time frame on the screen that you're looking at can't be can't be trusted, but it's because actually the non-pure range that you're looking at might be a bigger time frame, and you might not have spent enough time over the top of that level to have actually hard closed that level. Yeah. So bingo, they can't be trusted. But what you would have to do is find it. So if we look at just the string of 3 candles here on the 1 minute, and we maybe go and look at, I don't know, a 3 minute, you'd look to see if you had it on 3 minute. You don't. Maybe it's a 2 minute. No. So you kind of have to look around and see if you can find it. And it's not a 4. Maybe it's a 5. Nope. You'd be surprised what these things appear on. 6. Even numbers like 8 are fractals. Oh, there you go. So there you have a 2 candle pure range. So when this candle closes, this becomes a 2 candle pure range. And there's another 2 candle pure range. So you would actually have to spend 8 minutes above that break level to close it as a break level. But to break it as an origin level would be different again because there's 3 candles there. So that's not an 8 minute, that's something else. No, we sort of dumped down relatively aggressively on daily close. They kind of just pumped down and took a bunch of liquidity. We then went up and started ranging to build back liquidity, which is getting denser and denser. So we've got news. There's obviously the CPI thingy, so they'll be setting up for a Darth Maul, as we call them, with his double-edged lightsaber. So this is our. So yeah, they've just, as you can see, Bitcoin's getting really dense both sides now, and this is starting to fill up. So, yep. Still don't really have a proper sense of direction, but there's a couple of levels that kind of stand out. If we hit anything above 114151 on Bitcoin, could create a rejection. If it goes a lot higher than that and then rejects, it's kind of bearish because it means it's taken a lot of topside liquidity before going down. But that level itself was a hold level that was generated today. And the reason it's a bit confusing is that yesterday we generated a hold level that could send the price to all-time high. So we kind of, you've almost got this perfect setup for a complete clear of the board, go one way and then go the other. And Sol has got some medium-term sort of timeframes that are pointing back to as high as about 206. It's looking like it's trying to create a range to build to 217, but it may not go past 208 in the next 2 to 3 days, just for reasons of the monthly. So there's some stuff going on. Yeah, I imagine we'll get some volatility whenever they announce whatever they announce. And other than that, we're finally getting some entries on Fartcoin. Best day ever. And we're shorting Pump. And we longed Aster. And that's about it. Did some scalps on Sol. So we're hoping that in the next hour and 12 minutes we clear this box to the downside. which just means that we get below the whole candle and then we can hopefully hit the short target. And if we got a relatively greedy entry, not the perfect top, but got a pretty greedy entry. If we don't clear that box in the next 1 hour and 11 minutes, then probably just close it, take what profits are on offer, versus risk bouncing this back in the other direction. And then you could maybe short the new range trend if there's a range trend created. So take the profit, bounce the candle, smack into the range trend, and then short it again. That would work. In the meantime, we're just been watching how price action evolves on a 1 minute chart. So it's built an origin level. Doesn't want to leave that box, does it? So often I'll talk about polarity, which is when certain things happen at certain prices close to certain times. So if you're getting towards the end of a candle close and it just continuously bounces off where a hold level is not present yet, but would become one if it closed above that level, then that's polarity. It gives you like an idea that in advance you know that they are trying to make it happen effectively. And you can do it the other way around. Like you can target the body of a candle as like a take profit for a short. So if you've got a candle that's wicked through a trend, and you know that they're just going to pull it back down, you can actually just either TP at the trend or you can TP at the body of the candle, because it's not going to create a hold level if it's going to keep going down. So sometimes it's kind of like taking or putting TPs in logical places based on continuation of structure, because there's just certain things they're not going to do if it's doing something, like if it's going down. So this, unfortunately, what you're seeing here, if we don't lose this box, then that's kind of polarity. Like if they just stay inside this for a long period of time and never drop below it, it's because they probably want to make that hold level and then they probably want to reverse. So maybe just take your profits and move on to the next thing if it sticks around in here or starts to range up. And this is pretty much what you notice, that is basically exactly what those daily reversals look like. Level gets created, creates the move up. It's just 1 minute version, all fractal. So that could actually even be an example there. If that loses it, actually, like, so this may end up being a prime example of pure versus non-pure when it comes to trends, because it applies to trends as well. or applies to range trends, I should say. So you got 3 candles in the range. So it's not actually a 1 minute range. So that one hard close over the top of it didn't create a move up to the next hold. So it came back down. But if it can stay above it for a bit longer, maybe another candle, then maybe it can move. Maybe. Depends what it is. There it goes. Hmm. Welcome to polarity. So that level, which really should mean nothing, it's not a support level. There's no reason for it to pump like that off that level, but there would be in the future. And what you've just kind of seen is that they have future intent. So when you see that kind of thing, it's whilst it may still come to the target, it's generally best just to take the profits that you've got and move away. You see if it comes back and then TP. And it probably will come down here as long as it can do it in the next hour, but they looks like they've got intentions to make that into higher time frame support. How much time do we have left? 1 hour. So it's got 1 hour to get back below that box. So you could potentially look at this close if you get a whole candle on the 1 hour here in 2 minutes, then keep it open. And if you don't, then maybe consider just closing it and taking the money. Um, Not that I've ever really thought about, but I'm sure there would be. People with addictive personalities probably wouldn't be so good. I don't know. Or maybe it would. Maybe they'd just end up getting really good. Um, no, I've not really thought about that. Okay, so it might create the hold level there. 30 seconds. Yep. So we've got a hold level. It's opened on the trend. Hey, damn it. Yeah. Maybe. I think emotional people could still trade. They just need to be self-aware, I suppose. Sometimes, like if you are feeling something, most people would say that, trading should have nothing to do with feelings, but if you are feeling FOMO and you recognize you're feeling FOMO, then you probably just shouldn't trade. Like that's the now if you don't have feelings, you wouldn't know whether you've got FOMO or not. And then, so sometimes feelings are actually not bad. Emotions are sometimes not bad. They might tell you that something's wrong. I mean, look at all the people who smash out all these bullish YouTube videos and tweets and all that kind of stuff today, and within moments of the world being full of the dreams of super cycle and everyone's all bullish about the price going up, and then we dump $10. It's just the weirdest thing is that those people have emotions. They're getting all excited. They're getting all excited. They're putting out all that content, and they're a really good indicator to us that something's not right. So yeah, they just shouldn't be getting liquidated. They should sit them down and show them a compound interest calculator and just go, why are you trying to make X amount off one trade with big risk that puts you into the position of getting liquidated? Like, why are you trying to do that? Just make sensible small trades frequently and make a lot of money. Like I had a swing position open that I would have taken up to 247 on Sol, but the top side just continually creeps down, and the resistance now at 240, 240 I think today, and it's just not worth it. Not worth having it open. you could actually make the same amount of money just by taking a few sensible trades each day and then stepping away. Yeah, I was just like a kid in a candy store. The only problem I had with that event was that it stuffed up the data feed so badly to TradingView that there were like candles that had different levels on them on the same token. And I was like going, oh, where's the bottom? I remember a couple days in a row watching. I opened exactly the same chart, and the line had moved, and I was like, "What the hell?" Yeah, I mean, you need to find your own risk tolerance, and you've got to also build your own confidence, and it's got to be genuine confidence, not I've had 15 good wins. Let's mortgage the house on the 16th. Um, but there was someone in another Discord yesterday talking about how people who trade one to one inevitably are not going to succeed because a fees and b losses and that kind of stuff. There's so many traders out there who actually can't understand that you can have a really high win rate. Like you've just got to be very particular about what trades you take. And if you have a really high win rate, then you don't need to have so much risk. You could just have one to one trades, and with a really high win rate, you can compound them and you can make really good profits over a reasonable period of time. So it's, and you'll hit a point where, even if you're doing it as a career, as a job, you'll hit a point where you just don't need to make more money to live. Like if you own a house and your mortgage is paid off and or you're renting and you've got enough. Imagine if one scalp gave you a month's worth of rent and you could take two or three of those in a day. And so therefore all your rent is covered, your food's covered, however your life is. Doesn't mean you need a Lambo. Like you just, and if you want one, just plan it over a longer period of time and do it responsibly. Or 100x everything. Whole port, single trade, 1% risk, 1% stop loss. Every cent you got. Do that. Do that. Shadow band. Ooh. Thank you. 1 hour hold level. So most of these lower time frame levels should just crumble now if you've got a 1 hour hold level pushing the price through. Are you going to start selling courses? No, probably not. It would take a lot of time to make a proper professional course. I don't know. I may do one-on-one things, maybe. It's not too different to what I do now, apart from more interactive, I guess. Yeah, I think the whole risk-reward thing is really just a balance. It's if you just took every single 4-hour origin to hold trade that happens, you might get stopped out on, I don't know, maybe 1 in 10, maybe not even that. So if you just put $1,000, make $1,000, and by the time you're up to 10,000 in your port and you lose one, you're back to 9. You're not going to lose 9 in a row. It's not going to happen. It's yeah. I mean, that would just be this trade right here. Obviously, you're not going to take this on a 1-minute chart, but you get the gist. First hold levels there. 1-to-1 is a plenty big enough stop loss for this type of trade. They don't tend to, you know, they don't tend to go much through that. What you can also do is you could do 10 1-to-1s. So you got $1,000 now, you've made 10,000, and then you could just risk one of them. Risk 1,000 with a really tight stop loss and make 3, or lose the 1,000, but you've just risked 1 out of every 10. Like, it doesn't have to be some fixed thing like a lot of professional traders seem to think it has to be. Like, and I reckon half of those professional traders lose their bloody trades because they're so stupid that they actually think they have to get a certain risk reward. You'll win a trade if you get what the trade is offering you. And if it's not offering you enough, don't take it. And if you don't know how to tell what a trade is offering you, then there is more learning and education required. So if we look at that as just an example, we know the minimum amount that trade is offering me is to this hold level. So I will take the trade to that hold level. And sure, it could go up there, but it could also hit the hold level, reject down and stop me out and liquidate me. So I'll just take what I know it has to offer. And I think that's probably one of the key things. So when they talk about low risk reward, high win rate, well, you're going, well, actually, it's a really high win rate. It's stupidly high because I'm only taking what is clearly available to me. So, and I'm not worried about that. So this one here, that level, if we'd taken it off this, first hold level would be that or that. Most likely that, proper engulfed. So take it there, go to there, go to 1 to 1. Most of the time, a 1 to 1 will win. And that one came down, got close, but still went to the hold. So you could have had that one, that one. So if you were dealing with $1,000 risk, you've now got 3,000. And so whatever the next one is, you could even decrease the risk, but decrease the amount. So maybe you never inflate your amounts past your risk. Like if you've won every single 1% trade you've ever done, never take 10%, on the next one. Don't do that. But if you were doing something like this and going, okay, well, wherever your next level is, which is this bad trade, hold level's right here. So tiny move. Don't take that. May go higher, but don't take that. You probably have to go back in time, but I mean, that's another one. That was a pretty... it doesn't really have a hold level. So you could have taken it to the break level. Maybe take it to there. So if you just won all that money on those trades, maybe this one you reduce your stop loss half in size. You could reduce the amount that you put on the trade, but then the end result would be the same anyway. But it's you could increase your risk on this one and then potentially make more. And maybe do that 1 out of every 10. And it would be pretty bad luck if that 1 out of every 10 you did that with was the one that actually went wrong. So it's... And even if it did, you'd just lose what you were prepared to lose anyway. So, and make it back on your next 1 to 1. Hello. It's like 8:16 here at night. Okay. 45 minutes to lose the box. Yeah. Like Marty's post today about his 1 hour TA that's going to send the price to 250. It's like, I think I replied with something like, if you don't want to drink the retard Kool-Aid, you just... Because a 1 hour candle is just going to go straight through a weekly level. Eek. Oh, so you're having breakfast. That's total 2 up 2. Yeah. It's not too bad. It moved the trend to the bottom side. But it's just floating. Everything's kind of geared up for some kind of news pump and dump, or dump and pump, whichever way they go first. Total's just floating in the middle of support and resistance. kind of pressing up against that. No rejection yet. No hold level. Like this structurally could just bounce down here and then bounce up. So it's floating in the middle, doing nothing. Baking cake. That's what they're doing. Waiting. What's that up to? No entry. Ugh. Like even that's just waiting. Not touching the trend, not touching the hold level, just sitting. Waiting. That's funny. Just hasn't quite touched the rejection yet. Waiting. Not losing the box. Waiting. Stuck in the middle. Just waiting. Yeah. I I might go and get some early sleep and then try to wake up for what time is it? It's not that bad, is it? 6 p.m. 12 hours. 11 hours. Oh, okay. Hmm. Yeah. I might go get some early sleep and see if I can get up a bit earlier when hopefully things are going to be moving around a bit more. Uh, if it doesn't lose that box on the 4 hour close, and if it creates, so hence if it, where's that 4 hour? Dear, I'm getting tired. So in other words, if this candle here closes particularly above that wick really bad, it can just bounce quite quickly if that's the case, or even above that body, it can still be a hold. So if it yeah, if it doesn't lose that box in 37 minutes, then just take your profits, and then if it goes down, great, but not worth it because this thing down here, that is a hard closed 4 hour origin level. So if you close up above that, you could just bounce off that and power through your stop loss. So just, yep. Mm-hmm. All right. Good night, everyone.